Hello, everyone, and welcome to the HUBB U.S. market update. April 28th, the end of the trading month. And the market actually managed to squeak out a positive one, this one. And considering it was a huge week of earnings, that's pretty impressive. Here to break all it down for you is Rob Roy, the Chief Market Strategist at Elliott Wave Options. How was your week, Rob?
Good, Dux. How about you?
It was great, but I am very happy that it's Friday. Now, to break down the week this week, Rob is going to be using HUBB's charting software, and you can check that out at hubb.com. Rob's going to be giving us his US summary as always, looking at the Dow, S&P, and NASDAQ. But I get a hunch that he may want to dig into the GDP and consumer confidence as well. We know that you want to hear his thoughts on VIX. I definitely do. So there's many stocks to dig into. It's been a huge week for earnings. 35% of the S&P reported. Google, Microsoft, Amazon, Tesla, Chipotle, Coke, Nvidia. They're ones he's going to be looking at. And we can't go a week without Bitcoin. Now, don't forget to get those questions in. We're going to be answering those at the end. Great questions as always, every single week. Before we get started, don't forget to click on that like and subscribe button below. The numbers keep growing each week. Thank you very much for that. All right, Rob, let's start looking at the US summary.
Hi, everyone. Welcome to this week's live U.S. market update. Well, as we take a look at the SPY, you can see that pretty impressively bouncing back the past 2 days. We had this move to the downside. I actually sent a note out to our subscribers here on Tuesday that we had broken not only the very important, in my opinion, level of 410, but we also broke the 10-day moving average. And I said that if we got follow through and broke below the 50-day moving average, then you had to change everything. I've been talking about in these updates, cautious optimism. And then I said on Tuesday, maybe we need to drop the optimism and just become cautious. And if we were to have closed below the 50-day moving average, which is that royal blue line, we might have had to switch to defensive and taken just the cautious off. But now we're bounced back up. We're above both 410 and the 10-day moving average. So I think we're back to cautious optimism. As much as that is confounding people from the comments that we see on YouTube, et cetera, it's a big bounce back to the upside. So pretty impressive move. Maybe this was just a test of the 50-day moving average and nothing more than that. So moving back to the upside here, when we take a look at interest rates, can see that we had this move down. I was concerned about that when we moved lower here. I said the same thing when we had this vertical move to the downside here and broke below 34. I think the market can handle rates drifting to the downside. And you might be thinking, well, why is downward rates a problem? Well, prices and yields move in inverse proportions, right? So if money is moving into the bond market, prices go up, yields and rates go down. But if it's a slight drift lower, then that's okay. That's actually a positive for stocks, especially in the NASDAQ and the tech stocks. But when it happens in a vertical motion, that means that money is leaving the equities market and moving into the bond market. And that obviously is bad for stocks. And so when we went boom with this gap down, that was a bit concerning, but we held the support level at 34 and bounced back up. Now rates back down a little bit here, but unless we have a pretty significant move below 34, I think that we're okay on rates. In fact, my Goldilocks scenario that I've been saying for weeks and weeks now is if the rates stay between this 34 and 40 level as support and resistance, in my opinion, then that's the area that you want to see rates, and that's good for the equities markets. And when we look at the dollar, you can see that we're still just holding right here at 101. No significant change, even though it looked like earlier in the week that things had gotten a little bit tenuous. But finishing off the month, as you said, Dux, this is the last trading day of the month. So that's when they wanted to have a positive month. That's when money managers, they get their bonuses, et cetera. So not surprising that we had an upward day today, but it's possible. It's positive that it was a follow-through day from yesterday. And then the VIX. Now, if you're bearish on the market, which I know a lot of you are, this is where you're hanging your hat. my Chuck Norris hat here. Look at this move to the downside here on the VIX, and that has to be concerning if you're bullish, and it has to be reassuring if you're bearish. So we had this level here right in through there around 19. 2019 has been an area of support for a while. Obviously, we've broken below that level in the past. We've been down to 16. We even got down to 12 and below 10 for a short period of time a while back. But around 19 has been support for quite some time. And we broke below it. We came back up. But in these moves lower that we had on Tuesday and Wednesday, really all we had was a test back up to the 19 level. And now the VIX is lower. And look where we closed on the VIX today. So, it's a wave 3 to the downside on the VIX. And yes, Elliott wave does matter even on the VIX. So at some point in time, it looks like we are going to have a bounce back to the upside, perhaps at the beginning of the week, but we'll have the start of a new month on Monday, and that's when new money goes to work. People that put money away in retirement plans, IRAs, 401ks, et cetera, the institutions that collect that money put it to work on the first trading day of the month. So at least at the beginning of Monday, you would think that we'd have a move to the upside again, but whether or not it can hold it or not will be a totally different story. So when you take a look at all these things and you wonder, where do we go from here concerning different things? Let's take a look at the Dow. And the big move to the upside here on the Dow is the fact that we broke above this 340 level. So breaking above 340, first time we've done that since the last time we closed above it was back on the 13th of April, and there was no follow through the next day. So are we getting ready? There's still no 5-wave Elliott wave pattern, but perhaps we have a little bit of a zigzag pattern here that we can talk about, potentially moving to the upside. You know about the zigzag pattern on the SPY. And so, perhaps up towards that 350 level, moving there. And then if we take a look at the Qs, you see the Qs moving back above 320. So you can see there was some importance in today's move where some of these markets, we had confirmation on the SPY, broke above a resistance level on the DIA. The Qs broke above that 320 level, which is really crucial, held 310 on the low on that move to the downside that we had earlier in the week. So perhaps we're moving up towards that 330 level. And then we take a look at the Russell. And when we look at the Russell, we can see that we've held that area, came down to test 170. You've heard this story so many times on the levels between 170 and 190 on the IWM. Song remains the same. Led Zeppelin play it. And then you look at this level in the middle of 180, kind of getting a little shorter on resistance here. That 190 level almost kind of moving down towards 180. So a little bit tighter range, shorter term, at least on the IWM. And when we start talking about these markets, you begin to wonder about the GDP report came in. And guys, if you have that slide on the GDP report, it was a little bit worse than expected. So growth is lower. Is it getting to a point where bad news is good? We've heard these things before where good news becomes bad and bad news becomes good. Is that the scenario that we're getting into? Because the GDP was a little bit lower than expected. The fact that, the Fed is getting their way with slowing down growth. The inflationary numbers haven't been coming down quite as much as they would like, but at least it's being shown in the GDP. And then the consumer confidence. And if we have that slide as well, consumer confidence came in surprisingly lower, is expected to be flat from last week. And you can really dig in. The Conference Board gives you a lot of data. And one of the things that I found interesting was from a travel aspect. Are people going to travel? And they were saying, no, it's going to be a staycation summer, that term that was coined back in the COVID days and everything, is people staying home. They're not going to travel. So what is that going to do to the oil patch? What is that going to do for the airlines, et cetera? Are they going to follow through? Are they really serious about the fact that, hey, we are not going to take the traditional summer vacations that we've had in the past? We're not going to take the ones that we had planned out. I thought that was a nugget that was in that consumer confidence board. And there's a screenshot that shows you the fact that with the consumer confidence survey, it's peaked and it's come back down. And an interesting nugget to it is 13 of the last 14 months, it's shown that consumers are expecting a recession. So they've been expecting a recession for a while. Are we going to get the official recession? I tend to think so. If the consumer is tightening their belt, that is the key data, I think. We can look at inflationary data, we can look at GDP and all those things, but it's the consumer that has been driving the U.S. economy. It's such a resilient consumer that we have in the U.S., and if they are really going to tighten their strings and not spend money, I think that's going to have an effect. Now, you have to respect the fact that the market jumped back to the upside the past 2 days and see if we can get above the 420 level. I did want to show one international market real quick, if I could, and that's the INDA. Look at that move. How impressive is that? And we've talked about how the INDA had been pretty impressive back here, July and August, made a nice move there in October, then softened a bit, but then it's made a really nice move. You can see from the chart that it's one of the more impressive international markets. And you look, that's a pretty qualified zigzag. They look at 38.2, almost dead on the nose. And we're nearing that 61.8% level. So we're getting to a point where that could be the end of the wave 4. It's also getting in that area of the 61.8% fib retracement. So we're having a 61.8% fib extension on the zigzag at almost the exact same point that we're getting a 61.8% corrective move in the wave 4, because it still has a qualified 5-wave pattern to the downside. So certainly the INDA is one of the more interesting international markets. We'll see if we can move up to that 100% level or if this is going to be it. But, pretty interesting data there on the INDA. So interesting stuff going on in the markets here at the end of the week. Not what we would have thought earlier in the week, Dux.
Yeah, a very, very interesting week indeed. All right, now before we move into the US stocks of interest, keep getting those questions in. I'm seeing some great questions here. Like Rob's seeing me over the side, typing and so forth. There are some great questions coming in, but I'm not going to be able to get to all your questions. I'm sorry, but you know what we can do? You can go to TradeFinder at 9 o'clock on Tuesdays, Eastern Standard Time, and they can ask you more questions, right, Rob?
Correct. Yeah, TradeFinder is great. I'm glad you brought that up. We look at the markets, we look for trade ideas, and we have a live Q&A. So absolutely a good opportunity to ask questions and gain information. TradeFinder is a lot of fun too. There's a good community there. So yeah, it'd be great for people to sign up and join us next week.
Great. All right. Now let's move into the stocks of interest for you. Now, I think the first one you wanted to look at is Bitcoin, right?
Yeah, and wow, pretty wild the last couple of weeks, hasn't it been, Dux? I mean, we talked about this move to the upside here. We had this wave 5 pattern that's extended to a wave 5 that's 125%. We talked about this triangle pattern last week that we'd broken out, moved vertically to the upside, came vertically back down, and then the question became, okay, we've come back and tested the breakout point of this triangle, which is not unusual. Triangles break out and come back and test those levels. But then as we started teetering on moving lower, the question was, are we going to come and give back some of this vertical move? And the answer was no. Bitcoin said, not so fast. We're moving back to the upside. And at the time of this broadcast, we're just under 30,000. I know people always say, you're showing an end-of-day chart and Bitcoin trades live. We get that, but it also has an end-of-day feature, just like the futures market and the regular markets as well. So a pretty impressive bounce there. And so far, we've held this vertical move. So, it does beg a question of, is that a risk-on sign or is it a concern of banking? Because there was more, negative First Republic news. But I felt like that was all baked in the cake, so I didn't want to get into detail there. I think those are just talking points from the media trying to figure out what to say. I don't think that's a surprise to anybody. I don't think it should be if you looked at it before when the news came out. But yeah, pretty impressive move on Bitcoin. So now the question is, can we break above these levels here around 30,000? And if we can, Bitcoin could be off to the races again.
Now, obviously, we touched on this earlier, a lot of earnings this week, mega caps front and center.
Absolutely.
We talked about Google last week, right? What do you think on Google now?
Yeah, Google was pretty impressive. In fact, their wording was impressive too. I mean, they singled out Nvidia, which we'll look at as you mentioned earlier as well, that they're coming after them. So now, that's calling them out. They talk about being called out in all the UFC and boxing, et cetera. That basically, I felt like Google called them out. So a pretty pretty good earnings report on Google, and some of the areas that they've been spending a lot of money on that have been losers are now turning slight, but turning profits. I kind of thought that we might move a little higher on that earnings report. But, we'd had a pretty impressive move here in the middle of March. So I guess you could say that the fact that there was no give back there and we've held above this 105 level is pretty much a positive. But with some of the other stocks that we're going to look at, I thought we might have had a little bit more of a move here, but staying above 105, I think, is key. We have labeled a wave 4 here. So it looks like as long as we can hold 105, that's going to be the key, Ducks. If Google can hold 105, I think you have to be bullish on Google moving forward, especially with their moving into AI and everything else. AI was the big subject of earnings, wasn't it?
Yeah, it was. Now, we're talking about AI. Let's have a look at Microsoft. They had a cracker.
They sure did. Wow. See, that's what I thought would have been more like what happened with Google, but that is one impressive move. And look at this 137% extension on the wave 5 from this wave 4. You would have expected 100% extension. So are we getting a little bit extended? Well, we are. With one of my rules is no security in any time frame gets very far away from the 10-day moving average. So you can see we're a little extended now on Mr. Softy from the 10-day moving average, but what an impressive move. And I don't like this gap. So if you're long Microsoft, I think you got to be pretty happy with that move, but you probably ought to be a little cautious of perhaps a little bit of give back next week, even if we just come back towards the 10-day moving average. But this gap is a concern to me because our AI data has shown 94% of gaps get filled. The caveat, though, is that we don't know when. Sometimes it takes a while before the gaps get filled. Some get filled immediately, some take some time. So that's concerning. But boy, you're right. That was one heck of a report. And, obviously some short covering factored in there as well. But what an impressive move out of Microsoft.
Well, the charts don't take in pre-market moves or post-market moves. Amazon was on fire last night. But if you woke up this morning and saw where Amazon was, you'd be shocked.
100%. And actually, we had an alert. We had a strangle on Amazon for our alert subscribers at ewotrader.com. And a strangle is when you're buying a call and buying a put. And then we'd come back here and done that at the 8th of March. So we had this triangle. And so we get this breakout to the upside. And for our subscribers, and what we do is we send out alerts on entries, any adjustments and exits. On TradeFinder, every Tuesday night, we do look for trade ideas. But for our EWO subscribers, we send out alerts for all steps. And we actually took the call part off, Ducks, yesterday. And then after hours, it looked like you might have made a mistake as it was at 120. But we had a guaranteed plus 40% on the trade, regardless of what happened. That's the worst that we could do. And it's hard to turn that down, right? But then when you saw that we were trading up at 120 and after hours, you're thinking, oh, man, that's not going to be too impressive when everybody sees that. But it did. You're right. It reversed in after hours. It came all the way back down. And as you can see, back down from where we got out. So in the end, the move that we made was correct. And, we're not always right. We're wrong sometimes, but we got this one. We nailed this one spot on as far as getting out. We had some extra IV in there with the earnings report coming out. We timed it perfectly. But that was interesting, wasn't it, Dux? That I was wondering, how Amazon was going to react, and when you saw that first spike, but to see it reverse was pretty interesting. So we have a clear resistance area here at 110, and that's going to be the key. We're not in a 5-wave pattern, so we had this wave 5 down, but notice that it was 128% extension. So just as a reminder to those that are newer to Elliott wave, when you have a wave 5 that goes past 100%, you don't look for a retracement back to the previous 4. All you're looking for is a 61.8% move back, and look where that is. Right here. So basically, Amazon has done what it's supposed to do based on Elliott wave rules. And so when the rules are hit spot on like this, then you have to sit back and wait for the stock to tell you what to do from here. And I feel like that's where we are on Amazon. Resistance is at 110. Can we break that? Perhaps if we do, then we're in a new impulse move. But for now, everything has happened that's supposed to happen from an Elliott wave Fibonacci standpoint. So with Amazon, I think we got to be a little cautious here and let it tell us where we're going to go.
Okay, so no earnings from our next one this week, but Tesla. But of course, Tesla had a little bit of volatility attached with it as well.
Absolutely. Yeah. We can't go a week without Tesla, can we, Doug? So, we talked about this before, that 180 was the key. It had to hold 180. And I think we were pretty spot on this one, too, because we said if it doesn't hold 180, then the next level, and it's not a strong level of support. It's holding so far, but it's not that strong at 160. So we got a little bit of a rebound back to the upside here, but this one's a little bit nerve-wracking. If you're bullish on Tesla, which we know so many of you are, you can be buoyed a bit by the fact that, hey, you've got a gap there that needs to be filled. So perhaps we do go back up, and I wouldn't be surprised to see that if the market has some continued strength at the beginning of next week. Perhaps we go back up and fill that gap there and test 180 now, because what was support becomes resistance. But we broke below that level. We talked about the triangle in Tesla. You can see it here, and it did exactly what we said, Doug. And breaking 180, we're going to 160, and now we have to see what happens. So we're kind of hanging on by our fingernails here. Look at that. Even on the high today, all we did was go back and bump our heads on the 10-day moving average. So you feel a little bit better today, but it's not all clear yet on Tesla. It's still pretty shaky there on Tesla. And if we turn and move back, this is one of the other rules we talk about, Dux, right? Is that, the 10-day moving average I talked about, but we also talked about when you break support or resistance, you have to have a follow through or confirmation day. So you can see that we broke below 160 there on the 26th. No follow through day. We came back up, and that set the stage to move back above 160 today. But again, only hitting the 10-day moving average on the high. Still got to be a little cautious. The most bullish thing I can say about Tesla right now is I do feel like there is a decent chance we go up and test that support level at 180, see if it's resistance, close that gap, and then all bets are off. We have to see where Tesla goes from there.
Okay, another name which I never seem to get right is Chipotle, but they just had it off this week, didn't they?
Oh my goodness! You were talking about the report on, Microsoft having a cracker. Look at that on Chipotle. In fact, Tuesday night during TradeFinder, as you talked about TradeFinder, we talked about Chipotle Tuesday night because the earnings come out after hours, and we knew that it was a big move to the upside. And I made the comment that, yeah, it's up massive after hours. One of the things that's come out during this time frame is the stocks that you would expect to do well, the fast food stocks, McDonald's, et cetera. And Chipotle is technically fast food. It's a healthier version of fast food. It's a bit more expensive than McDonald's, Burger King, and all those. But yet it is still fast food. And if the consumer is going to tighten their belt, is this going to be where things go? The market seems to think so. But when I said I wouldn't chase this move after the earnings report, well, you can look back and say, yeah, well, look what you missed on the past 2 days. And so, that big move to the upside, this Thursday and Friday move have been quite surprising to me. I've done extremely well on Chipotle in the past. It's almost in the same vein, and it's interesting that we did it back to back with Tesla, Doug, says people love this stock like they love Tesla, and just an unbelievable move. But same scenario here, I think, is with Microsoft. You got to be a little cautious here. We're way above the 10-day moving average, and we have this massive gap here. So, yeah, that's been a great run. I totally would have missed the past 2 days. No way I would have chased that after that big move to the upside. It's just my disciplines wouldn't have allowed me to. Sometimes, you miss out on stuff, but you create your disciplines over time and experience, and I've been doing this for a very long time. So I'm still a little cautious on how high can that go, but what an impressive move. People are obviously going to eat at Chipotle.
Well, if you're eating at Chipotle, you got to have some Coke with it, right?
Yeah, and this is obviously one of, I don't know if people are familiar with how big of a position that Warren Buffett has in Coke, but it's one of his biggest positions, and he does collars with it. And so, you take a look at, well, we'll get there eventually. When you take a look at the symbol KO.
Yeah.
Let me get the chart up here. That Coke has been pretty impressive here. Isn't KO the symbol for Coke?
KO is a symbol, yep. Finished
I wonder.
64.15 today.
Yeah, let me give it one more try here. I'm not sure why it's not wanting to come up. It doesn't like that symbol for some reason. But yeah, Coke has obviously been a big mover to the upside as well, and Warren Buffett is loving it. And this is in one of those areas where when you have a movement like that, this is a defensive sector. We talked about the sin stocks in the past: tobacco, alcohol, and gambling. Soft drinks as well. Coca-Cola is a really good example of a defensive sector. So yeah, people buying Cokes while they're eating at Chipotle, and with this live stuff here, it looks like my chart's frozen. So perhaps my computer here, you can tell that I'm in the mountains. By the way, I'm back in the Appalachians. I was in the Smokies last week, in the Appalachians this week, and the internet is not what you would love here, and so that screen's frozen. So I apologize for that, but anyway, yeah, Coca-Cola is Buffett's biggest holding, and not a bad place to be right now if you are concerned about the consumer spending.
That's Elliot Wave giving me a little bit of tip there to close the window.
Yeah,
that's okay.
Yeah, exactly. Yep.
There's plenty of things to play on there. So we've had obviously a lot of stocks we picked up. We've looked at here. If you can get that up and running, maybe we can also have a look at Nvidia. But while we're doing that, please keep getting these questions in, because I think Rob's going to get things up and running. If they're not, we can take those questions, right? You can take that to TradeFinder on Tuesday at 9:00, and he will answer all of your questions, because I know you've got some great questions in there already. There's one stock I want to look at as well, which is ENPH. But how's it going there, Rob? Is it coming back up?
Now I'm probably going to have to reboot here, so it'll take me a second to bring that back up. So if you guys want to put up one of the screens, give me a second, and I'll get this back up. I can talk about Nvidia though. There's no reason to bring up a chart of Nvidia, because that one's an easy one. Nvidia is basically still in that range between 260 and 280. I was wondering how Nvidia was going to handle this news that they were being sought after, that they were coming after basically from Google. And it's held in there so far, but 260 to 280 is still the range that you're looking for on Nvidia. A break above 280 and you go long, a break below 260 and you go short. It's still in that trading range. And last night in our insiders meeting, we had one of our subscribers was talking about how they had a call ratio spread where they were bringing in premium on Nvidia, and they were quite happy that the stock was staying in its trading range. And so there you go. There's the chart of it right there. And you can clearly see that trading range that we just talked about between 260 and 280. And we break below 260. I think we're coming down to 240. So that's what you'd have to be concerned with. But if we could break above 280, then I think we're off to the races, and we're probably looking at that wave high there around that 320 level. So, taking a look at that trading range is what, 2 months now? It's been pretty much in this range. So it's done a nice consolidation of that big run that it's had. So I was wondering if there was going to be some negativity with Google saying calling them out by name. Hasn't worked out that way. Stayed in that trading range. You wanted to look at ENPH? Is that what you said, Doug?
No, we're going to jump into Q&A before that.
Okay.
But no, that's a great rundown for this week, and well managed on handling a crashed computer. That's always difficult to do, especially when you're going live. For the viewers, keep the questions coming in. We're going to get to them now. Keep on clicking on the subscribe and like button. We love all of the support that you give us. All right, but we are going to jump into that Q&A, and there's a few questions here on ENPH. Now, there's obviously a little bit of trouble in that solar space this week. I think it was a miss on earnings. I can't remember who it was off the top of my head, but the stock got smacked on the back of it, right?
I truly did. And we actually sent out, we have one of our strategies at ewotrader.com is an AI-based time strategy. And it looks for this exact pattern. It looks for stocks that have had a big drop because the likelihood, the AI goes through and determines over 300 data points. I think we're one of the first to have a true AI-based technical trading system. AI was so talked about, as you and I just talked about in the earnings reports. So it gives a score on the likelihood of staying in a trading range following a drop like this. And so this one had a pretty high score. And so far, so good here. You can see the big drop and then the likelihood of it staying in a bit of a sideways range from there. You do calendar spreads or butterflies or some sort of sideways strategy. That's worked out extremely well for us. It's only been a couple days, but the AI says that we're likely to stay in this range. Maybe we drift down a little bit lower in the wave five, but we have labeled the wave five at about a 50% extension. You only had a 32% wave four. So I think hanging around this 160 level makes a lot of sense. It's also an area of support that if we go back in the charts a while, you can see that this area has been support and resistance going back for some time. So it has some history there. And I think that the lookout for EMPH is kind of a trading range from here following that big massive drop.
Well, also that sticking with the same sector, SEDG, that actually hung in a lot better, I think. It looks very interesting on the chart.
Yeah, bring this one up, and it went down, but came back up. This one held support at 280. It didn't go down to a year plus support like ENPH did. So holding it at the 280 level is important here. And then if you're long this one, yep, you've got that gap above that needs to be filled. We're still not back to the 10-day moving average, so that's a negative. It's just the problem, though, is there's so much right through here, consolidation, all this stuff right in through this area here of support resistance. It's got a lot of stuff to get through there, congestion, if you will, from this 280 level up to 320. So I feel like it's going to have a difficult time moving higher from here. If it moves to the downside, I know you love this phrase, Dux. This is one of those Katie bar the door if it can't hold 280, because then you're looking all the way down here at this support around 200. So far, it's held. But if it didn't, then that's in play because there is nothing to support it between this 200 and 280 level. So holding this level at 280 is key. And perhaps if you're long, you at least get the bounce back up to the 10-day moving average, if not filling this gap. But to go long now on this one, I think you have to wait and see a break above 320.
Okay, well, they've got earnings on the 3rd, so there might be a good option play sitting in that one too, right?
Oh, there you go.
All right. Another one to look at that's been asked on by a couple of people is PSNY, Polestar.
And let's see what that chart looks like. Not one that I look at very often, and you can see it's a lower dollar stock. Trading range here, but 4 is key. So if the people asking questions on this are looking for it to go long, if you get above 4, then I think you're clear up to 5. But there's some more resistance at 5. And there's some support in here that's been building in. So it doesn't seem like it wants to drop much below here. You can see almost a slight pattern here. It's ever so slight of higher lows there, going down to almost to hitting 3 there back on the 24th of March. So a bit of a ascending triangle pattern, as you can see from the resistance at 4, and then that pattern of the higher lows. So perhaps we could get a little bit of a break above 4. And if it does, I do think you see 5 pretty quickly because you note that the move from 5 to 4 was pretty quick. So, it's got some headwinds here at 4, but if it can break above that, I think you see 5. And then it's got another set of headwinds there at 6. So it's probably some slow going here, but perhaps a bit of a speculative upward move there.
Okay, another good one to look at is and you won't get a chance to trade on this one because they report Monday pre-market is SoFi.
Oh, wow.
SoFi.
Yeah. Let's see. Yeah, look at that. It's got a mind of its own right now. So this is the problem, and coming up and living in the Appalachian Mountains is not too much in the way of internet support. The bandwidth is just not that high, and let's see if we can get it all the way back to the beginning there, so I can bring the symbol up. Oh, maybe there we go. SOFI, right? It's SOFI.
Yep. So far.
It's not liking that, so maybe that wasn't the end of it. Well, let's try the reboot again. Sorry about that, guys.
Tell you what, Rob. I know they're reporting they report on Monday. So listen, maybe you can talk about it on Tuesday night.
Oh, that sounds good. TradeFinder, join us on TradeFinder. Awesome point, Dux, and we'll cover it then, and we'll have some more information on it at that point in time.
Yeah, no, listen, we're terribly sorry, a little bit of technical difficulties, but we were running out of time. We've gone overtime as we always do, because we're always trying to help you all out and like Rob give you so many great insights. But sadly, we're going to have to go and enjoy our weekends. We hope you enjoy yours as well. Thank you very much, Rob.
Thanks, Dux. Thanks, everybody, for viewing, and appreciate your time as always. And have a wonderful weekend. Next week promises to be a pretty interesting one based on the way we finish this week.
And we'll see you all next week, Friday, 5 p.m. Eastern Standard Time. Enjoy your weekend.
Take care, everybody.